Hi guys, this is Teacher Party. Welcome to my YouTube channel. Do the most. You know what you need to be doing. Do the most. Okay. In terms of subscription, notification bell, zonke lezi zinto lezi, all these things. Okay. So we're looking at the accrued income journal, and this is the case study. On February 14, 2023, Jenny's Florist Shop based in Parktown supplied ZFBB Bank 1,400 red roses for all their staff members at the Johannesburg head office towers. This was a Valentine's gift to all staff members. Jenny charged 15 Rand for each rose. ZFBB Bank has a general rule that it pays its suppliers 1 month in arrears. Jenny's financial year end is 28 February 2023. Ignore that. Required. Identify, discuss, and conclude on the elements of the financial statements in the transaction above. We're finally doing A. We've gotten rid of B and C. We've already dealt with. See the videos I uploaded prior to this one. So let's do the identification. Okay, so when the question says identify, so you've already, there's videos, guys, there's videos I put explaining what an asset is according to the conceptual framework of 2018. There's also videos that I put on examples of assets, examples of expenses, examples of income. So guys, you should not be struggling to spot these things quickly. So we spotted two things. Income, there is an invoice issued and at a certain price. Good. And then there is money that's going to be coming late. So that is income accrued. So that is accrued income, but in the sense of like, that's income that's going to come late. Okay. Now you have to, first, when you're identifying, you have to put the definition down. So what is an asset? So it is a present economic resource. So let's just do this definition of earn. And you must be clear, guys, in your test or exam. So what is the definition of an asset? It is a present economic resource. And what does economic resource mean? And you must be writing this down verbatim as it is. A present economic resource is a right that has the potential. So an economic resource is a right that has a potential to produce economic benefits. And then the next thing, it's controlled by the entity. Under that, you must always ask yourself, does the entity control this right that it has to produce potential economic benefits? And then it's resulting from the past events. The right exists at the reporting date because of the past events, or it speaks to the past events. So now we have to apply. First, when you're answering this question, you must put the definition down and then apply. Sometimes you just do a column, two columns. On the left, you just write the definitions, the recognition criteria. On the right, you just put the application. It just makes it easy for you guys to ace the conceptual framework and get a distinction. So a present economic resource. So Jenny's Florist sold, Jenny Florist Shop, they sold 1,400 roses at 15 rands net to ZFBB Bank, thus giving her a right to potentially produce economic benefits flowing to her business. That right, let me just add, ladies and gentlemen, it's giving her a right to earn income from her sales. So Jenny's Florist sold 1,400 1,400 roses at 15 Rand to ZFB Bank, thus giving her a right to earn income from her sales to potentially produce economic benefits flowing into the business. So she has the right to that 21,000. Why did I not mention that? Total revenue Oh, guys, these binaural bits move, 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 move. I don't want to learn about real lipids. Sorry about that, guys. I'm listening to binaural bits while I'm working. Total revenue is equal to 21,000. Okay, so Jenny's florist shop, English, guys. Jenny's florist shop sold 1,400 roses at 15,000, total revenue being 21,000 to ZFVB Bank. That's giving them, let's just put a full stop so that this is not big. That's giving her a right to earn income from her sales. That right is 21,000. Income of That's giving a right to earn income of 21,000 from her sales to potentially produce economic benefits flowing into the business. So guys, you must apply. When they say apply your knowledge to the case study, that means you will give the specific details over this case study. You're not going to be doing some wishy-washy definition and not speaking to the definition. Okay? Then it says controlled. Yeah, then it says controlled by the entity. So what does that mean? Controlled by the entity. Let's apply to that. ZFB Bank entered into a sales agreement for roses with Jenny's florist shop. A code and an invoice was issued. Ne? So this is how things happen in practice. You'll get a call, an email saying, I'm looking for 1,400 roses. How much is that? You get a code, and then when you are happy with the code, you place an order. They give you an invoice. So that is a sales agreement, ladies and gentlemen. It's a florist shop. You wouldn't necessarily have a contract. You're supplying this once off. But business to business, maybe some will have contract, but this is a small SME business, so they are big on codes and invoices. So Jenny's shop has a right and control over the cash inflow of 21,000 to be received from the bank, which is the client from. And also the inventory of 1,400 roses is controlled and owned by Jenny's florist shop, and they've released that right over to the bank in exchange of potential economic benefits, guys. So remember that. And then we're moving on to the last one, says resulting from the past events. The sales agreement that ZFFB Bank entered into with Jenny's florist shop, the code, and then the invoice issued for those roses is a result of the past event. Okay. Then you move to now definition of income, because remember we said we identified accrued income, we identified sales revenue. So it says income is an increase in assets or a decrease in liabilities other than those relating to contributions from holders of equity claims. All right. Then what is increase in assets? Can we apply to that? Jenny's florist shop supplied their roses on credit to the client, therefore making ZFBB a bank. The bank, guys, need a bank. Sorry, I take that back. Making ZFBB Bank a debtor. So it increases the assets. Once Jenny's shop receives a 21,000 payment, the bank account will increase. So guys, you must write these things in this nice fashion. Yes. Okay. Then decrease in liabilities. So here you're just trying to make the marker aware that In accounting, a decrease in liabilities refers to a reduction in the amount of money that a business owes to the creditor, while a third party's liabilities are financial obligations that a company owes to others and are recorded in the statement of financial position as part of the company's total assets. Oh, yes. Okay. Can I remove that for you because it's going to confuse you? I just put a high level thing here. This is high level stuff that you will do second or third year. So I don't want to even speak to that now. I don't want to speak to that now because you guys are going to be confused because I'm making you learn 3 years in a minute, which is not fair on your side. So liabilities are financial obligations that the company owes to others and are recorded in statement of financial position. This is not a definition of liabilities, just giving the marker a general overview that you understand what decrease in liability means. But now when you're applying this to this case, in this case, ZBB Bank is owing Jenny's shop 21,000 as a debtor rather than a creditor. So you are also applying that even though you know that, okay, this is not applicable in this case. You're just not going to leave it blank. You're just going to speak to it, but make the marker understand that you know your story. Other than those relating to contributions from holders of equity claims. So the sales of 21,000 are as a result of Jenny's florist shop selling goods rather than the owner depositing money as forms of capital. Okay, so moving to the recognition criteria, the elements shall be recognized if the asset and income is relevant and the criteria of faithful representation, such as completion, free of errors, and unbiased is met. So recognition criteria, the 21,000 income and 21,000 asset is a relevant item to users of financial statements as it will affect their decision making. The amount and the nature is significant to users of the financial statements. So disclosing the 21,000 income and 21,000 asset in the financial statement would result in the information that is complete, free of error, and neutral. I mean, Jenny is the owner, even the shareholders in the business, if it's a company, they would want to know the complete the complete figure in terms of the income earned in the 2023 financial year, and also they would want the true reflection of assets, guys. So this is relevant information. And also, even though the money is not received, the recognition of that income, it just speaks to the completion and the statements being free from error, because the error that could have been done is the error of omission, saying we're not using the accrual concept, we're using the cash basis in terms of accounting. So that means we'll not recognize this revenue because we've not earned the money. So that is not applicable in this case. It was not done. It would have been wrong, by the way, anyway, not to use the accrual concept when preparing financial statements. So in this case, ladies and gentlemen, this set is free of error and it's neutral. I hope, guys, you never struggle with the application of conceptual framework. It is that easy. Apply yourself. And also, I'd like to challenge you as first-year students in accounting. Learn what business do. Just check what hotels do. Just take the financial statements of a hotel. Understand what is inventory at a hotel. Understand what's assets at a hotel. Understand what's liabilities at a hotel. Because what is an asset, what is inventory at a hotel is seen as an expense in a school. So please acclimatize yourself with what businesses offer out there and what they recognize in their financial statements. Thank you so much. Goodbye.